Today, let's talk about the Bank of Nova Scotia, one of Canada's big six banks. In today's low-yield environment, it's not easy finding high-quality companies with a 4% plus dividend yield. Bank of Nova Scotia, which is also known as Scotiabank, fits the bill. Even more exciting is learning about the company's commitment to its dividend. Let me take a second to read from the dividend policy that's listed right on Bank of Nova Scotia's website, because it's something any income-loving, long-term investor can appreciate. Growth in the bank's earnings have resulted in dividend increases in 43 of the last 45 years, one of the most consistent records for dividend growth among major Canadian corporations. The bank declared its initial dividend at the rate of 3% per annum on July 1, 1833. Payments have been made continuously since. You heard that right, folks, 1833. Bank of Nova Scotia has paid dividends to shareholders without interruption for 188 consecutive years. When I put that dividend record together, with research showing that this successful business is expected to keep growing for years and years, well, I knew that Bank of Nova Scotia was a stock I wanted in my portfolio. Hi everybody, Mike Nadell here for the Dividends and Income channel. Before I get going, please do us a favor to help grow our channel, okay? Hit the thumbs up at the bottom of the video, subscribe to the channel, and ring the bell so you get notifications of new videos as we publish them. Okay, now let's talk about Scotiabank's history, what it has going for it today and tomorrow, how it might appeal to dividend growth investors, and why I felt it was a good addition to both my personal portfolio and a public portfolio I'm managing on behalf of my grandkids. For centuries, England ruled Canada. In 1832, a group that wanted to form a new bank in the territory of Nova Scotia received royal permission to do just that. And on August 29th of that year, Bank of Nova Scotia opened for business in the John Romans building in Halifax. There were 5 people on the original staff, a cashier, 3 tellers, and bank president William Lawson. The business grew gradually into a national network across Canada. In 1874, the first branch outside Nova Scotia was opened in St. John, New Brunswick. About a decade later, the bank merged with the United Bank of Prince Edward Island. In 1882, an agency was opened in Winnipeg, and it wasn't too long before branches opened in the United States, first in Minneapolis and then in Chicago in 1892. International expansion wasn't limited to the United States. In the late 1800s, the bank opened a branch in the British territory of Kingston, Jamaica, to facilitate the trading of sugar, rum, and fish. It was the first time any Canadian bank had expanded in the Caribbean, and it formed the basis of what would eventually become a large footprint of 25 offices in the Caribbean and Central America, a footprint that would play a role in Bank of Nova Scotia becoming the most international of Canadian banks. In 1900, a major office was opened in Toronto, and soon branches were opening in the Western Canadian cities of Edmonton, Calgary, Vancouver, Regina, and Saskatoon. In 1931, the Bank of Nova Scotia moved into a building that has become a Canadian landmark, and 1709 Hollis Street in Halifax still houses the bank's Atlantic Regional Office and Halifax main branch to this day. Businesses boomed across North America after World War II, and Scotiabank was no different. As it grew, Bank of Nova Scotia came up with unique consumer loan products, offered the public trading of gold, and appointed the first female branch managers in Canadian banking history. Expansion into Asia took place in the 1960s and 1970s, and Bank of Nova Scotia developed an even larger presence in Central and South America in the 1980s and 1990s. That brings us to today, when Scotiabank is one of the leading international banks in the Americas. Some 16% of the bank's earnings come from the Pacific Alliance, and another 11% come from the United States. As Morningstar analyst Eric Compton said, the international exposure gives the bank the potential for higher growth and return opportunities compared with its peers. Here's what the folks at the Bank of Nova Scotia say now about their mission and corporate culture. Guided by our purpose, for every future, we help our customers, their families, and their communities achieve success through a broad range of advice, products, and services, including personal and commercial banking, wealth management and private banking, corporate and investment banking, and capital markets. With a team of approximately 97,000 employees and assets of over $1.2 trillion, Scotiabank trades on the Toronto Stock Exchange and New York Stock Exchange. The Bank of Nova Scotia is one of what Canadians call the Big Six. Those 6 banks form something of an oligopoly. They hold about 90% of their country's banking deposits. Scotiabank ranks 3rd in market cap, right behind Royal Bank of Canada and Toronto Dominion Bank. Bank of Nova Scotia also ranks behind those banks in assets under management, while it's well ahead of Bank of Montreal, Canadian Imperial Bank of Commerce, the National Bank of Canada, and other financial services groups. For a long time as an investor, I've admired the consistency, strength, and dividend commitment of Canada's banks. During many stretches when U.S. banks have been in serious financial trouble, when they needed to be bailed out by the U.S. government, and when they had to cut their dividends, Canadian banks hung in there and recovered quickly. Each of the Big Six has bounced back strongly from earnings declines that hit the industry during the depths of the COVID-19 pandemic. And over the last 12 months, Bank of Nova Scotia has seen its earnings per share eclipse where they were before the pandemic, with more great growth expected over the next year. The story is similar for sales, with $28.3 billion over the last 12 months being greater than any pre-pandemic year. While most of the Big Six banks are expecting earnings growth over the next 12 months in the low single-digit ranges, or even slight declines, Scotiabank is projecting earnings growth of nearly 10% in fiscal 2022. Bank of Nova Scotia also excels when it comes to the kind of quality scores it receives from various rating agencies and services, including an outstanding A+ credit rating from Standard & Poor's and a top score of 1 in relative safety from Value Line. Morningstar's analyst says, in our opinion, the company's balance sheet is sound. While the bank has not been perfect, it's generally avoided value-destroying products and expansions while pursuing sensible investments and growth opportunities. We assess the company's capital return strategy as appropriate, and it's largely in line with its peers, with a healthy focus on a dividend and some additional earnings left over for repurchases after internal investments. Although Scotiabank has underperformed the S&P 500 index the last few years, it's been a long-term outperformer, as this fast graphs illustration shows. The yellow highlighted area shows a pretty decisive advantage for BNS over the last couple of decades, and that's thanks in great part to the company's reliable growing dividend, as shown in the red circled area. Now let's talk a little more about that dividend. One piece of recent news that will appeal to investors, like the large American banks, Canadian institutions were not allowed to raise their dividends after the pandemic hit. A few months ago, regulators gave major U.S. banks the green light to increase dividends. And just a few weeks ago, Canada's banks got the okay from their government to do likewise. We don't know yet when BNS and the other Canadian banks will decide to raise their dividends, but those increases are expected to come soon, making stocks like Bank of Nova Scotia even more attractive. It's important to remember that Scotiabank's dividend is paid in Canadian dollars, so don't be fooled by what might seem like dividend cuts over the years. For example, this fast graphs image of the New York Stock Exchange's version of BNS uses US dollars as a metric, and it makes it look like the dividend was reduced in 2009, and then again in 2015-16. But when we look at BNS through the lens of the Toronto Stock Exchange, which uses Canadian currency, we can see that the dividend actually was raised those years. The discrepancy was caused by the ebb and flow of foreign exchange rates, and it's something I'm not too concerned about because over time, it's going to even out. Here's another important note. If you're an American investor and you hold Bank of Nova Scotia or any Canadian stock in a taxable account, the dividend is subject to Canada's 15% withholding tax. You can request a refund of that tax by filing paperwork at tax reporting time, but one way to avoid it entirely is by buying Canadian stocks in a tax advantage account, like an IRA, Roth IRA, or 401k plan. In those accounts, taxes are not withheld, thanks to a tax treaty between Canada and the United States. Alright, so how buyable is Bank of Nova Scotia stock these days? Let's talk for a minute about valuation. According to Morningstar, in the $65 range, Scotiabank is trading just about at fair value. Using fast graphs, Bank of Nova Scotia looks fairly valued to a little undervalued. Its 10.84 blended price-earnings ratio is slightly lower than its 11.5 norm of the last 10 years. Scotiabank's forward PE ratio is even lower, 10.5, which is one reason the analysts at Forward Equity Research believe the company will outperform the market over the next year or so. If I take the 10-year normal blended PE ratio and put it in the fast graphs forecasting calculator, the stock has a 9.64% estimated annual rate of return over the next 2 years. That's not too shabby for a boring bank. Bottom line, Bank of Nova Scotia isn't a screaming buy, but it looks like a reasonable choice for investors interested in a solid stock yielding more than 4%. I have some shares of Bank of Nova Scotia in tax advantage accounts, so I don't have to worry about filling out paperwork to try to recover Canadian withholding taxes. That includes a small position I opened on October 29th in my Roth IRA on behalf of my 13-month-old grandson Owen and his sister-to-be, who's due to be born in March. Owen thinks this was a slam dunk buy. Owen's dad is Canadian, yet he owns mostly US tech stocks. He has large positions in companies like Microsoft, Tesla, Netflix, and Apple, so I thought a 4% yielding Canadian bank would offer a nice complement by providing income and less volatility. I'll be adding to that Scotiabank position, and some others, every month for the next several years. That account is an adjunct to the Growth and Income portfolio, a real money public project I've been building to eventually help pay for the college costs of my now 2-year-old grand twins, Jack and Logan. The Growth and Income portfolio was launched in June 2020. It now includes 17 stocks and one exchange-traded fund, and it's worth about $4,400. If you want to learn more about the Growth and Income portfolio, please check out the link in the description. Once on the Dividends and Income site, sign up for a free subscription and you'll be notified about the stocks I'm adding to the portfolio shortly after I buy them. Okay, that's all for today, folks. Again, if you value our content, please give us a thumbs up, subscribe, and ring that notification bell. Take it easy, everybody. Back at you soon.